Hello, I'm Rafa, and I'm the founder of Sierra Trading. I started Sierra Trading about 7 to 8 years ago, and I've been building studies ever since, primarily studies around order flow, which is what I'm going to cover today. I have other technical studies, but will be covered in a separate video. We'll start with the reconstructed tape, which essentially aggregates and puts together all of the limit order fills that were reported by the exchange. And it gives you the true size of the market order that was executed by a market participant. This helps us see how big the aggression or small the aggression is as the market is moving. This helps us see the constant aggression if the market is trending or if the buying or selling is drying out. Additionally, it can help us spot stops because you'll typically see a large sell order at the very bottom of a move or a buy order at the top of a move, similar to what's shown on the screen right now. To the right, you can also see how the constant small sell orders keep pushing the market lower and lower. And then that order flow switches from red to blue to buying, right? I also want to point out the subgraph at the bottom, which is the slippage. This lets us know how thick the order book is or not. Whenever a large order hits the market, you can see how many ticks it swept the book. The reconstructed tape comes with a handful of different studies, one of them being the study that automatically plots a level whenever a large order is detected. These levels often become support and resistance later on, so it's really nice to have those automatically plotted. You can change the color, and the color will automatically fade as the days go on because those levels become less and less important. I also have a study which will sum up all of the buys and all of the sell orders in a sliding window of time. This way, it's easy to know which side is dominating during that sliding window of time. It also helps us visualize when that flip happens from buying to selling. Just because the bars are red and sellers are dominating doesn't mean that the market's definitely going to go lower. It just means that sell order flow, aggressive sell order flow is what's dominating in the current period of time. All right, next up we have our options data. We have a lot of tooling around the different options data that we have. We get the live data feed from the exchange. This particular chart helps us see momentum, divergences, and helps us spot the beginning of a trend. You can see how the red lines are trending higher as the market keeps going lower and lower. This helps us hold on to trades. The CPR, which is the purple line, is a call put ratio, so that one's going to go negative. And at the top of the bars, you can see these little lines that get added. These let us know that the lines below are leading the market, and it's a high probability that the market's going to continue in that direction. So when you see those pullbacks, it's a great opportunity to add to a short or to get into a short. And then you can see when the bars flip from red to blue, it's a completely different algorithm than the one from the reconstructed tape. This is just looking at order flow. Next up, I have this key levels. The key levels have been an extremely popular study amongst all of the traders in the room because they provide the support and resistance levels, essentially marking the max move of the day. Eventually, if there's enough touches on a level, the level will break. You'll also notice that the levels tend to migrate as market participants are now trading other strikes. They're repricing the max move of the market. I can definitely say that this study has made a lot of people a lot of money in our room, just because you can see how consistently well it works and how dynamic it is throughout the day, regardless of the trading session. Here we have our gamma map, which is your traditional gamma exposure map. It's a simple map. You're primarily looking at the large nodes for targets and support and resistance, as well as if we're going to be in a high volatile environment, which is going to be the red zone, the red bars, or a low volatile environment, which is going to be when we're trading within the blue bars. You can filter this data to only see 0 DTE or all expirations, 3 expirations, 5 expirations, whatever you want. It gives us a different slice of the data. Primarily, we're focused on 0 DTE for day trades, though. And lastly, I have this study which detects anomalies, if you will, or outliers of high trading activity across all 3 indices of SPX, QQQ, and SPY. Whenever that outlier is detected, it often marks an inflection point. These inflection points often lead to reversals, but not always. The background hints at the direction that we're likely to go in, but as you can see, they don't always work out, but they often do. Again, it's just another way of looking at all of the same data. All right, moving away from the options data that we have a divergence detector study, which you can use to compare price and any other study that you have. In this case, we have the cumulative delta, but you can use RSI, MACD, you can use any of our options data like the total GEX, DEX, or CPR lines, which we do. It helps us automatically detect those divergences so you don't have to be always looking and comparing all the different bars. It's all automated. You get the little alert on your chart. You can get an audible alert as well. It's just your typical divergence detector, but with a very flexible study so that you can put it on anything. Sometimes you're going to get many prints, but it's just one other data point with everything else that we have to give you an edge on potentially taking a trade. All right, finally, last but not least, here are all of our footprint studies. You can see the different markers on the different bars, the arrows, the dots, the squares, the lines that span multiple bars horizontally. All of these give us different data from what the order flow looks like inside of the bar. The arrows show us aggression from buyers or from sellers. The dots show us either a candle taper, an exhaustion, and then you have the horizontal levels that span multiple bars. Those tell us that there's poor structure in those bars. It means that we moved really fast through that zone, and likely when we revisit that zone, it will act like support or resistance depending on the color. So that's all I had to show you today. Hope you can see that together with all of these different studies, you can put together a holistic view of what's going on in the market, how market participants are interacting with the market, and it can help you to decide if you want to engage into the market or not. If you decide to join Serial Trading, I promise that I will do my best to get you onboarded as fast as possible. We have a huge library of educational video for all of this stuff, so you won't be left alone trying to figure it out on your own. We also have a great community in Discord of people who are there and also help other traders. So I'll see you on Discord. Cheers.
Good.